Ladies and gentlemen, good day and welcome to the Indoco Remedies Q4 FY26 earnings call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Candice Pereira from Dolat Capital. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good evening, everyone. I, Candice Pereira, on behalf of Dolat Capital, welcome you all to the FY26 earnings conference call of Indoco Remedies Limited. I would like to thank the management for giving us this opportunity to host the call. Today, from the management team, we have with us Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, and Mr. Pramod Ghorpade, CFO. I now hand over the call to the management for their opening remarks. Over to you, sir.
Thank you, Candice. Good afternoon, everyone. Thank you all for joining this call. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are projections or estimates about our future events. These estimates reflect the management's current expectation of the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Indoco does not undertake any obligation to publicly update any forward-looking statement, whether as a result of the new confirmation, future events, or otherwise. Thank you so much. Now I'll request our Managing Director, Ms. Aditi Panandikar, for her opening comments.
Yeah, thank you, Pramod. Good afternoon, everybody, and thank you for joining us on our Q4 FY26 call this afternoon. It gives me great joy to announce that after almost 6 quarters, we are in positive in this quarter for performance. This performance has been possible due to a great acceleration shown by international formulations business, both in the regulated markets as well as emerging markets. While in India, as the season did not support performance, Q4 numbers were muted. Anti-infectives and respiratory in particular gave a significant hit. However, at the level of product-wise prescriptions generated, almost all our main and important products are showing good growth in prescriptions, emphasizing the fundamental strength of the brands and ensuring that there is great demand for those products in the market. In US, we received approval for the ANDAs of liquid orals for brivaracetam and lacosamide. In India, we launched a new brand extension of Cyclopam, our #1 brand. Our API manufacturing plant at Patalganga made us proud with their EcoVadis score. We were also recognized for our CRO work at IDMA's annual day. I'm also happy to announce that as of January this year, and even for the month of, on MAC basis for the month of March, Rexidin M Sport Gel has become the most prescribed stomatological brand in the market. We also overtook, as a company in prescription audit, we have overtaken Pfizer to become the 20th most prescribed company for the number of prescriptions we generate. Last week, Indoco entered into an agreement to hive off its ophthalm business in India and Africa to Sunways. This move was made in the interest of our wonderful brands and portfolio, which should now get the requisite attention they deserve and therefore grow. This hive off would also help us at Indoco focus on areas of strength and those which are our core areas for growing the ethical business. The OTC business has also done well, and our efforts to add presence of our products with the grocers, the modern trade, and quick commerce are underway and should soon give promising results as well. The macroeconomic factors at this time are certainly not at all conducive for doing business, especially as regards the cost of goods and the likely disruptions in exports. We hope as a management to steer our business with responsibility during these tumultuous times. thanking you once again, and I hand over to Mr. Sandeep now to take you through the quarter performance.
Thank you, Aditi. Good afternoon, everyone. Let me first begin with the business highlights. Standalone net revenues of the company for the fourth quarter, FY25-26, are at rupees 4,291 million compared to rupees 3,411 million for the same quarter last year, and rupees 3,896 million for the immediately preceding quarter, that is Q3 of FY26, growing at 25.8% and 10.1% growth respectively. Consolidated net revenues of the company for the fourth quarter are at rupees 4,559 million compared to rupees 3,839 million for the same quarter last year, and rupees 4,343 million for the immediately preceding quarter, with 18.8% and 5% growth respectively. Standalone EBITDA to net sales for the quarter is 14.7% at rupees 630 million compared to 1% at rupees 35 million. And for immediately preceding quarter, EBITDA was 6.6% at rupees 259 million. Consolidated EBITDA to net sales for the quarter is 10.9% at rupees 497 million compared to minus 0.2% at negative 8 million last year. And for the immediately preceding quarter, 7.3% at 315 million. Revenues from domestic formulation business for the quarter are at rupees 1,739 million as compared to rupees 1,851 million. Major therapeutic segments like vitamins, antidiabetics, stomatology, gastrointestinal and cardiac performed well during the quarter as compared to the same quarter last year. Revenues from international formulation business grew by 94.6% at rupees 2,147 million compared to rupees 1,104 million. Revenues from reg markets for the quarter grew by 78.3% at rupees 1,401 million against rupees 785 million. Revenues from US business for the quarter grew by 77.5% at rupees 546 million as against rupees 308 million. Revenues from Europe for the quarter grew by 68.7% at 786 million as against rupees 466 million. And for South Africa, Australia and New Zealand, the quarter grew by, the base being small, the revenues were at 692 million as against 122 million. Revenues from emerging markets for the quarter grew by 134% at rupees 746 million as against rupees 318 million. Revenues from API business for the quarter degrew by 23% at rupees 315 million as against rupees 409 million. And the services part, Anasafa CRO and Indoco Analytical Solutions for the quarter grew by 65.3% at rupees 895 million as against rupees 467 million. That is all about the business highlights for the fourth quarter, and I now request all the participants to put forth their questions. Thank you very much for your patient listening.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, wait for a moment while the question queue assembles. The first question is from the line of Sajal Kapoor from Anti-Fragile Thinking. Please go ahead.
Yeah, hi. Thanks for the opportunity. Aditi ma'am, the performance is definitely a recovery sequentially for sure, and that's heartening to note. I have a couple of questions around the receivables and the debt, if I may. So the standalone trade receivables grew 45%, while revenues grew only about 9%, and Q4 alone saw a disproportionate spike. So can you break down the receivables aging and identify which geographies or channels are driving the elongation of collection concerns, and confirm what percentage of Q4 revenue was kind of recognized on shipment versus actual receipt? Because it's kind of looking slightly disturbing, and the interest payments and the debt. So both the working capital, receivables, and the MSME payables are getting stretched. That's one concern. And the other one is the overall debt levels. It has been alarming for a while now. It's probably getting worse now.
So I will quickly answer your question. Can you hear me?
Yes, yeah, I can. Thank you.
Yeah. And then Pramod will probably give you more details. For this quarter in particular, what you would have seen is that the international business has done so well, and typically our collections for international business, especially collections for the emerging market international business, have a long credit period. So that has probably impacted. Coming back to the borrowings, and happy to share that the efforts are underway to ensure that the borrowings get reduced at the earliest. And with performance improving, I'm sure we will be able to do that. But I will allow Pramod give you answers on some of your concerns.
Yeah.
Thank you.
So, Mr. Sajal, as Madam mentioned, specifically about the receivables, you're right. Our fourth quarter performance, if you see, in terms of our exports to reg market, which is, overall up by close to about 28-29%. Out of that, emerging market, growth is about significant growth, I would say, in a fourth quarter, where, we have receivables, longer receivable, I would say, as compared to domestic business and API business. So that is the primary reason of, receivables, which are number of days of receivables, which are going up. Your second question about the overall loan position, that remains more or less same, as compared to last year, March 25. We are at total consolidation level. We are at 960 odd number. Long term 620 crore and short term of 344 crore. More or less, that was the same position during last year. In between, whatever repayment commitment were there with the funders, banks, which we have repaid along with interest, plus additional borrowings in some pockets initially during 6 months for our capex. But of course, we are very sure in terms of servicing the debt along with interest with the EBITDA number, which we would like to maintain during next 4 quarters. Thank you.
Yeah. Additionally, as we have disclosed earlier, there is very tight control on capex now, and good effort is going on to bring down the operating expense also going forward. This should all help.
Sure, ma'am. And just one follow-up. Can you help me double-click on supplier payables and the MSME dues, because they have risen sharply?
Yeah, there has been some, where we have not paid suppliers on time, given some of the cash flow situation we had. But I'm confident within a week we should be able to settle this.
All right. Okay. Thank you. Thank you so much. I'll rejoin the queue.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Nirmam from Unique PMS. Please go ahead.
Yes, hi. Thank you for the opportunity.
Yeah.
So my first question is on the domestic business. Now, as you mentioned in the opening remarks also, that the season was not good for us. Do you see this growth coming back in the next, say, year or two? And secondly, considering we have seen prescription growth, so is there some way that we can, I mean, what is the challenge when we see prescription growth, but then the medicines are not sold? So one is that. And secondly, is there any more optimization on the portfolio front? So I think we discontinued some tail brands during this year also. Further, we've sold off some more Opthal, our division also. So any more such rejigs for the next year?
Okay. So I'll start with your first question on the what we call primary, secondary and tertiary, which is the prescription growth. So typically the numbers you see in IQVIA or any of the agencies like PharmaRack on our products is what we consider secondary, that is what is sold from stockist to retailer. And then the number of prescriptions we generate, we use it as a measure to understand demand for our products and therefore the absolute offtake at the chemist counter, which is tertiary. So if you look at first of all what we call primary, which is the booking of sales, that for the quarter ended March is often dependent on the motivation, morale and how many people in your field staff are actually going to do their annual target. And they start going a little low despite of all efforts from our side. We always see this kind of a performance. I'll give you an example for, let's take the category of, if we take stomatologicals itself, then as per IQVIA we are down only by 8%, but my primaries are down 20%. And then if you look at the prescriptions on those products, they are all in high growth. What it simply means is that if you are seeing an RX performance now, then your IQVIA should follow after that. And unless there is too much stock in the market, your primaries should automatically get corrected. However, your concern about if we are really generating demand, what if our products are getting either substituted or not available? For that, this year in particular, we are undertaking a major exercise to reach out to the stockists who stock our products and the retailers. I can give you some statistics. Directly and indirectly, our organization reaches around 150,000 chemists. That is both through Warren Remedies, which is the OTC arm, and our own prescription business. However, if you look at availability of cyclopam, it is available at 3.5 lakh chemists. So generally, it is prescriptions and demand created, which is expected to make your product available. That is how we work. But typically, because our products are seasonal, what always happens is, when the season doesn't come in, you see the stockist is not very motivated to increase the inventory he carries on certain products, and therefore he goes muted. Down the line, there are very few shortages because there are stocks in market. Let's take our product Cital, for example. It is a urinary alkalizer and typically does very well in summers. But this year, in the month of March, I think there were a few rains also, and summer did not kick in the way it should have. So Cital, if you look at internal performance, it is down, for the quarter it is down 10%, and QOQ it is down 1%, but in IQVIA it is growing. And so are prescription on it. And the other day I had a PharmaRack review where they disclosed that in the market there is less than 30 days stock of this product. So typically now Cital should fire. But these are not things we can always control, because always motivating the stockists to purchase from us pretty much depends a lot on many factors, including the morale of the field staff who are going to do their annual target. I hope that answers your question.
Yes, ma'am. And the second thing on the non-core.
Okay. So ophthalmology in particular, I wouldn't say it was non-core for us, because we had a division. We tried to create two divisions. We were very bullish on it because, as you know, we have filed several ophthalmic ANDAs in US. So as a therapy, it remains an area of attention for us. But in India, for the last 4 years, we were not able to grow the business too much. And it remained very much dependent on whether conjunctivitis came in or not and things like that. And at the size at which it was, we could not give it enough attention. So that is why the hive off. Other than this, if you look at the present portfolio we hold, most of it is coming within the 4 or 5 main segments of the company. So you will have products either in respiratory, anti-infectives, stomatological, GI, or vitamins and minerals, which is carried by our gynec division. at this point, I don't see any more such identified opportunities for the India business.
Okay. And just to confirm, so this division sale was also not done to tide over the liquidity situation, right? Because
no, there is absolutely not. It is a very small division. At primary level for internal sales, for the year we have clocked 37 crores in India. And we have to recognize that we are a 13th player in this market where companies like Entor, Sunways, even very small organizations are able to get a lead on us. Obviously, because for them it is a very, very fundamentally core area of business. So they approach it differently.
Okay, understood.
Yeah.
Now, coming to our international business, so we've seen good growth across all the markets, US, Europe. So we expect this traction to continue in the next year as well, and particularly for the US because our sterile products are, the plant is still not resolved. So do you see this growth continuing in the US without the FDA approval?
So, what we have done, which I have said on earlier calls, is for our key products, we have gone into adding second sites. So much of some of the sterile sales for US that you see in this quarter has actually got billed from those sites, and that has helped. So therefore, what will really impact us if the plant situation doesn't get resolved really is the future approvals which should be coming on time. But otherwise, we are okay. Of course, we carry and continue to spend a lot on that site. So that is an area of concern, and we are trying to resolve that as soon as possible. But other than that, US today is not just sterile and ophthalmics. We do considerable amount of solid orals, and now we are getting into liquid orals as well. Also, the UK and Europe business has done very well. So, and we have a decent order book right now, and I'm sure our team will work very hard to continue this kind of performance.
Sure. So one question on the interest cost for this quarter. So if you look at the consolidated numbers, the interest cost has gone up materially. So is there some forex impact also here?
Yes. So I think it is particularly coming from Warren Remedies, therefore it comes in the consolidations. Because there was one loan in foreign currency, and as such it is notional unless the war goes on and on and on. Then it will actually impact us. But maybe Pramod would like to say something.
So this quarter exchange loss itself on a foreign currency loan, ECB loan, is substantial. Almost half a portion of this finance cost is towards the exchange loss.
So 20 crore impact?
24 crore impact.
24 crore.
Okay. And what would be a ECB loan?
10 million euro.
10 million euros. Okay, I'll join back with you.
Thank you. Participants who wishes to ask a question, please press star and 1. The next question is from the line of Kenil Mehta from Boring AMC. Please go ahead.
Ma'am, I had one question. Last quarter, we had a loss of 34 crores we had a net worth negative of 34 crores. This quarter, it's 82 crores. Any reason why FPP, which has seen increase in sale from 35 crores to 48 crores, has seen a negative net worth of 50 crores in this quarter increase?
Okay, Pramod, go ahead.
So Kenil, as you know, for FPP it is early years where it's all about investment. So the negative net worth which you see is the losses incurred during last couple of years, and we expect now this to turn around in coming years. But the net worth which we are referring is the impact of the losses incurred since acquisition till today.
No. The last quarter, as per your result press release, it was 35 crores negative net worth. This quarter is 82 crores. So what's the reason for 50 crores jump in a quarter of time?
So Kevin, if you look at, as you know, FPP had a historical business of purchase and sale from others. and it typically depends on the portfolio of FPP in that particular quarter. So whenever FPP only sells products supplied by Indoco, we do much better. But when they are purchasing finished goods from others and selling, that margin comes down. So if you look at sale of FPP and the COGS, that is where you see the maximum jump.
No, Kenil, you are looking at consolidated number, which includes not only FPP but Warren also, another legal entity. There also we have a negative number. So that is both put together, not only FPP but FPP plus Warren.
Okay, so you have not specified the Warren part in that.
Consolidation is that both.
Warren, as you know, is in OTC business, and we have very clearly decided that for at least 3 years we will consistently support it for advertising and any other things required to build that business.
Understood. And ma'am, we had filed a lot of products in the Europe market, if we see based on product basket for in 2025 and 2026. But based on your export data, we are not seeing that expansion in that product basket, except for allopurinol and paracetamol and Colchicine, few products.
Colchicine.
Yeah.
Okay, so what happens is, as you know, Europe and UK, there is major fluctuation in pricing. So sometimes some of these small molecules, if the current business environment doesn't support in a manner that we should make margin on it, then we choose not to sell. Yeah, Sandeep would like to say something.
Yeah. Hello. Yeah. See, besides allopurinol and what you mentioned, colchicine, we are also selling pregabalin and zonisamide very well, these two molecules. So, with contract manufacturers, of course, there's cetirizine, there's paracetamol, zonisamide, pregabalin, colchicine. So, there are many products. We are not dependent on one or two.
But we have got lot of approvals like apixaban, rivaroxaban, then ecosmide.
Apixaban should come in soon.
Okay, understood. And on the API business side, as we have got approval for the Warren Remedies part, should we see the increased scale up now for that part of business too, for outside consumption?
Yeah, so Warren Remedies doesn't yet have a reg market approval. So till now, it makes key starting materials for us, which we finish in Patalganga and sell in the reg markets. Therefore, Warren Remedies actually carries, we are not able to optimize it fully because what is made at Warren Remedies does not fetch reg market prices as of now.
Understood.
And that is partly the reason Warren Remedies financials also get disturbed.
Understood. And ma'am, wanted to know any reason why we have got a approval for rivaroxaban, but only we have supplied very negligible compared to other peers or capture the market share over last 6 months for US market.
We have got approval only for one strength.
Okay.
Yeah.
Understood. No problem. Thank you.
Yeah.
Thank you. The next question is from the line of Maulik from BK Securities. Please go ahead.
Hi, thank you for the opportunity. Ma'am, just wanted to understand what has driven the growth for our US business. So I understand you answered that sterile products which were site transferred drove growth. So what else was the reason why we witnessed this growth?
So same quarter last year in particular, if you remember, we were undergoing a major part of our master manufacturing cycle at two of our large solid oral sites, Plant 1 in Goa and Baddi 3. Plant 1 in Goa in particular supplies solid orals to US, and this plant therefore had got impacted, as in we could not supply it to optimum requirement. It is not just ophthalmics, but we also have a considerable amount of solids coming, as well as ophthalmics. What is the split between US sterile and... If I'm not mistaken, I know for the year, but quarter, should be...
Per quarter it is 10, 12 sterile, rest is all.
Yeah. So oral solids are, sterile is only 12 in this. So rest is all oral solids.
Okay, sterile is 12 million and the rest is...
No, not million, 12 crore.
12 crore.
12 crore.
12 crore.
We've got quite a basket of solid orals.
And they're doing well. Yeah.
Understood. Okay, ma'am. And also there was one exceptional gain for 4Q. Can you just help us quantify? I think in the notes it was for full year, so was not able to understand. Can you help with that, please?
Which number you are referring to? Sorry.
Around 34 crores of exceptional gain, I think, in 4Q number.
No. You are talking about other income?
16
No. In the exceptional...
for other operating revenue, then it is 16 crore exchange gain
on the foreign currency.
34 crore exceptional income is not there.
No,
we got the number wrong, huh?
So sorry, ma'am. Sorry, my mistake. It is 3.7 crores. Sorry.
Okay.
What is 3.7 crore exceptional gain? I have no idea.
That is all gratuity. Revaluation of
Okay. Some small amounts like revaluation of gratuities, etc.
Okay. Related to the labor code only, right?
Yeah.
Understood. Okay. Thank you so much, ma'am. Thank you so much.
Thank you. Participants who wishes to ask a question, please press star and 1. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Nirmam from Unique PMS. Please go ahead.
Yes, thank you for the opportunity again.
Yeah.
So just 2-3 questions on the balance sheet item. So one is there's a entry asset classified as held for sale in the balance sheet about 23 crores. So what is this regarding?
We have a land parcel we are looking at.
So we're looking to sell that land?
Yeah. It was lying idle for the longest time.
Okay. Secondly, so in the cash flow statement, I could see some provisions for doubtful debt, and that has increased year on year, so about 10 crores this year. So is this in line with what we generally do, or there is some issue?
Yeah, so Nirmal, it's a combination of both. One is one of the party where we have supplied some material, they have declared their bankruptcy. So that is one, so we have provided for that. And second is this is in line with our policy for provision for bad debts based on the aging analysis. We do provide for bad debts. Some old aging where we are discussing with them in terms of certain stocks, expiries, price differences, So on a safer side, we provide for those receivables.
Okay. Now coming to Warren again, so this quarter also I think we have a loss, and I think because of the advertisement that we did in the World Cup or something which you mentioned in the previous call. So what level of OPEX or advertisement do you have budgeted for the next year, and what kind of growth can we see in Warren?
So the business has, I think, grown from 92 or 94 last year to 120.
Yes.
130 this year. So that is a good jump. All our key brands, Sensodent K, KF, Kidodent, as well as the new launches DSP and DPC of the Sensodent family. The Sensodent DSP, DPC has been well received. The first consignment which has gone into the market, we are now looking for additional orders. And as such, the division looks set to continue to grow. Of course, we need to add more products to the basket in order to justify, because we have close to 350 people in the field. So with 3 or 4 products, it's not very effective. We have a few toothbrushes also, which our team calls fillers. They are doing well now. But Kidodent in particular, which used to be a RX product only, has been taken OTX. So both the ethical team as well as the OTC team sort of focuses on this brand, and it's doing very well. So with the toothpaste, I have less concerns despite all the advertising expenses, etc. The toothpaste side of the business at EBITDA is doing decently all right. It is the API capex done and the operating cost at API level from where we are really not able to sell anything right now because most products are under validation. So once you see the API side turn around, which is likely to take a couple of quarters more, then the Warren Remedies standalone will also start looking good.
Okay, ma'am, understood. So about 1 more year for the approvals and the validations to get over.
Yes.
Okay. And so again, on the emerging business, we saw pretty good growth this year. And so you've mentioned in the past calls that we have a good field staff going there and doing good work. So do you expect this to continue over the next 2-3 years? Do you have the portfolio basket, the products and the approvals?
Yes, certainly. I think Sandeep.
Yeah. I'll just come in here quickly. Yes, we do have a very impressive basket and a portfolio, and we are mainly operating in Eastern Africa, that is Kenya, Tanzania, Zambia, these 3 countries where we have field force on the ground, and about 8 countries in French West Africa, that is Ivory Coast, Mali, Burkina Faso, Benin, Niger, Cameroon, Senegal and Chad. So these are our main areas, and it is absolute promotion, scientific promotion that is getting us prescriptions. And secondary business is more important to us, which is actual sale from the grossists, as they are called, the stockists in these countries, to the retailer. And that is being measured. We also have a software installed there, Hi Doctor. So Salesforce effectiveness is getting measured in a very proper way. And we are measuring the per head yield, as we call it. That is how much per representative we are getting in terms of euros. So to answer your question in short, yes, the confidence level is pretty high for next 2 to 3 years on this business.
Understood. On the MMP that we had undertaken, so till last quarter we were still facing some challenges, some customer approvals were delayed. So now is everything solved? We can only see growth from here. Europe business did show a good uptake, but any more challenges left?
If I'm not mistaken, a very small delivery of paracetamol remains in the old smaller size in Baddi 1, just one. But otherwise, almost all of the customer approvals have come in. So we should be able to scale Europe and scale it with addition in margin from here.
Okay. So we should still see some margin benefits coming in the next years, right?
Certainly.
Okay. Sorry to interrupt. May we request you to please rejoin the queue, sir? We have other participants waiting for their turn.
Sure.
Thank you. The next question is from the line of Madhav from Shastra Capital. Please go ahead.
Hi, ma'am. Good evening and congratulations for the good numbers.
Thank you.
Yeah, madam. See, so what is debt expectation for this financial year and for the next financial year as well?
The debt. So, as we said, in IRL alone, there is 630 crore debt.
Long term, yeah.
Which is
combined.
And for the total entity, it is close to 950. Of all this, our short-term debt which has to be repaid will be around 300 crore, right?
So next year repayment is 146.
140 for the next year, yeah. So 140 crore to be repaid in the next year, coming year.
So during the financial year 2027, is there any plan for any reduction, madam?
Yeah, obviously. We are working on it.
So what would be the number? Is it 150? What is 147 crores is for this financial year or for the next financial year?
No, 140. Okay.
Yeah. So Mr. Madhav, so next financial year, which is 26-27, we have commitment to repay 140. another 140 in a year after that, and almost similar amount after in 28-29. So about 140 crore every year for next 3 years. While our objective, our target will be to repay or to prepay a little more than this.
Okay. Is there any additional capex than the normal capex? Are we planning for any capacity expansion kind of thing? Is there the current year or next year?
No. We don't plan any major capex now in next 2 years.
Yeah. Okay. Thank you. On the Europe side, I know when I was talking to the Mr. Sandeep during Q2 FY26 call, so there was an update from is that he want to update on the Clarity Pharma. There was 15 products for the 18 months. I think that 18 months are getting completed by now. So the current book, because Europe is doing well, and is there any contribution come from that, or so any light management want to share with us on the Europe the Clarity Pharma business?
So Clarity Pharma, as Sandeep had told you that time, has several products. And probably at that time in Q2 when he spoke to you, few were being transferred. Now some more products, especially in liquid category, are also going. However, as I said in answer to one of the calls earlier, we are very careful. The whole purpose of being on ground in UK is to be able to get more margin and not lose it. So if we see that the market is not opportune on price front, then we hold. So in that manner, Clarity business is yet to come to a sizable level where we can talk about.
Understood. Anyway, that's natural that you are taking active participation depending upon the market situation. Understood.
Absolutely.
Yeah. On the domestic front, madam, actually, so I think there is we could not know other than the legacy product, we cannot bring any other product for the flagship product other than the ODs to take it up. So
we have done extremely well on new launches, sir. I think fourth quarter total new launch has contributed to more than 2 crore.
Total 20 crore.
Total.
In this particular financial year.
In the financial year, 20 crores.
Yes.
Yeah. And we are getting a sizable amount in new launches and they are doing very well.
Yes.
So products like Cital PM6, Dropizin, Drotitec M, then we have Nosicodi, OHD3, we have Weapon CV, Vopanza, a lot of new products as well as brand extensions being launched. The latest product which we have launched in this quarter is Cyclopam AC suspension. There's also Strawferry. All our new products are being received pretty well. So on that front, I think, I'm sorry?
Yeah, if you can add this thing in the management presentation, that will help us.
Okay.
Yeah, because a lot of things are being and that helps us.
Yeah.
Thank you. That's all from me. Thank you, madam. Thank you.
Thank you. The next question is from the line of Maulik from B&K Securities. Please go ahead.
Ma'am, thank you for the opportunity again. Just wanted to understand what are our growth triggers for the regulated markets for the next year, which is FY27-28.
So, for the reg markets, of course, the Europe business of base contract manufacturing will continue to grow. But more than top line growth, that business is likely to give us better margins in the coming year because it could be manufactured in plants which have completed all its MMP scale-ups and all those things. In US, while historically we were only dependent more on sterile, we have now added a substantial solid oral base and that is also doing very well. In this year, both in Europe and US, we intend to launch our liquid orals, which is not as crowded a space as other solids, and we expect to do well here also. So there are a lot of plans, lots of products filed, being approved and getting approved also, and you will see a good combination of efficiency in manufacturing with the value add of good orders in place, helping us grow these businesses.
Okay. Thank you so much, ma'am. Thank you.
Thank you. The next question is from the line of Kenil Mehta from Boring AMC. Please go ahead.
Ma'am, I would like to know what is the capacity utilization for our oral business at Warren Remedies out of the 4 lines? And what are the initiatives we are taking to increase our sales? other
Yeah.
than OTC, export or
Right.
contract manufacturing for some
Correct.
bigger
Correct.
players?
Yeah, thank you for that question, because we have started exports from that site through, at this stage, to South Africa, manufacturer of toothpaste. I don't know whether it will come in this quarter. Huh? Yeah, it has.
Yes, this quarter.
37 lakhs, a small amount to start with, and we are seeking other such opportunities. Meanwhile, about 4 lines you said, no? So we have actually installed only one. So although provision was made, we have installed only one. There was a second line of mouthwashes, but we have not gone for that yet, because we continue to make mouthwashes at other locations. So capacity utilization of the toothpaste block is not a very big concern for us, because we have set up a state-of-art unit, and we are able to make 5,000 kilo batches with only 5 people inside. So that is our better managed plant. We really have good control on efficiency in that plant. It is the API plant, as I said, where we have both capital expenditure done. We also have operating expenses, because we are doing validations of products there. But these validations are not resulting into sales right now, because those products are not yet approved out of that site. And that is putting pressure on the entire Warren Remedies numbers. I hope I can. And as somebody said earlier, it will take us 1 more year to get reg market approval. We are trying to hasten it by varying site of a product from Patharganga to Auric. Hopefully that should bring US FDA faster. But I cannot promise that.
Understood. And one more question, ma'am. Over India business, over last few quarters, we are seeing growth in cardiac and anti-diabetic. Is it due to low base, or we have launched new products?
No, it is, our base is very low, which is why you are seeing the growth.
Understood. And what will be the actual revenue base we will see growing for the India business apart from the OTC? In line with IPM, or it will degrow?
No, line with IPM. Line with IPM.
Understood. And during the quarter, FPP was technically profitable, as we have seen in last quarter, if we exclude the Warren losses?
No. FPP, as Pramod explained, we were impacted with some extraordinary costs which were taken at the end of this quarter on expired products, etc., which is why it has seen a hit.
Negative 4.
Yeah.
4 crore.
Almost 4 crore was impacted, was the impact seen. But also the product mix. So we actually looked into this, because the COGS on the Q4 sales of FPP have been extraordinarily high. Yeah. Because some of our products are not, we do have a few products in our basket which don't get very good margins. And when we sell more of that, or when we have to do a shelf stock adjustment or things like that, in that quarter you see a hit.
Understood. So going forward, would we see that again, or it will reduce, as we have seen increase in Indoco portfolio?
It should reduce.
Understood. And can we get the new product sales revenue mix in the overall India business during the year or quarter?
20 crore during the year.
I think we have done close to 20 crore in new launches this year in India. And one of the highest is come from Drotitech M has done well. Your Vepazil, Braceness. There are many products. What we could do, like somebody requested, is possibly from next time, if possible in the FDA, we'll give you a line or two on this.
And ma'am, if we exclude the anti-respiratory and anti-infective, which has seen degrowth, our base portfolio would have seen the volume growth. Is it correct?
Yes, there is another category which got impacted in this quarter in particular, which is the urological, which is our urinary alkalizer, Cital. But like I explained, that should kick off this. So, because of season, there are shifts in these products. You get it sometimes in Q4, then sometimes in Q1 of the next year, depending on how summer or rains kick off. So for India business, it is better to look at a MAT performance and to review whether the products are doing all right, what is happening to them. Because otherwise there will be these kind of peaks and troughs.
Understood. Understood. And ma'am, the asset for held sold land, is it at the book value or we will get a more value than we have shown on the balance sheet right now?
We should get more,
Yeah.
but this is book value.
Okay, understood. No questions. All the best.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and one. The next question is from the line of Madhav from Shastra Capital. Please go ahead.
What is the revenue for the current quarter, madam?
Just check. For the year it's 120. I think this quarter
For
they
the quarter
did
is 27.
27 crores. Yeah.
27.4.
Okay. And so what is the plan for how much reduction in interest expenses can be considered for both standalone and consolidated for the current financial year, madam?
So, Ms. Madhav, if you see our repayment schedule is 140 as I mentioned, and our average interest rate is in the range of 8.5 to 9. So you can consider that much reduction in overall interest cost.
Okay. So the 960 minus 140 means, 960, 140 means around 120 crores reduction will be there.
Yeah, about 140 crore repayment if you consider
In a staggered
manner, then the average cost of borrowing is just short of 9%.
Yes.
Understood.
Yeah.
Understood. Thank you. Thank you very much.
Okay.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and one. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Yeah. Thank you everybody for joining us on this discussion and call, and for the very interesting questions you've asked. Wishing everybody a great weekend ahead. Thank you.
Thank you.
Thank you.
Thank you very much.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Dollars Capital, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.